going back, I'm going to kick back to rental here, since that's probably one of your bigger products that you guys have out there. Rates have crept up, unfortunately, on us a bit here. What are the standard 30-year rates with good credit right now? Are they in the fives? I think 5 3/8 or something like that. I may have seen on your website last time, or somewhere in that range. Does that sound right?
Yeah. So that's interesting that you mentioned, the volatility with rates. Just to tell a quick story on that. Like if we look back in Jan, we were like at all-time lows, between 3.5 to 4.5. And for alternative to conventional financing, I mean, that's almost flirting with conventional rates, right? With volatility in the market, some volatility based on the Fed and raising rates due to inflation, but also, if you look at the 2-year note and the 10-year note and just indexes in general, we go off the LIBOR, you'll see some spike to the upside, which has caused some of the rates to go up. So in Feb, we had like 1 rate hike, and in March, we had 4. In April, I think we had a couple. So there's been a lot of movement to the upside since Jan in that short period of time. So we went from like 3.5 to 4.5 on rates in Jan. And right now, to your point, we're at about high 5s to even low 7s, just depending on FICO and depending on leverage. Now, I mean, if it's still cash flowing the project, right? I mean, if you can get a rate that puts you in a place where you're cash flowing, someone's paying the mortgage, and getting some passive income, it's not a bad idea to jump in. As we all know, it's impossible to time the market. We have a 3-2-1 step down on the prepay for rental. So 3 points the first year, 2 points the second year, and 1 point the third. So after 3 years, you could refi again. So there's 2 ways you could play it. You could still
that's basically a prepayment penalty, right? A 3-year prepayment penalty with a step down on it. Just so I'm clarifying for everybody here. So obviously, the first year you refi, it's really hammering you at 3 points. Second year 2, third year 1 point.
Right, exactly. That's on rental. On bridge, no prepay. On rental, it's a 3-year with a step down. Now, so there's 2 ways you could play it. You could either try to see if it cash flows and jump in, or we hope to see some stabilization and hopefully correction to the downside in 2 to 4 months. And the property does have to be renovated. So if it's renovated now, you can think about it. Or in 2 to 4 months, if like you're renovating something, if you want to put a tenant in and wait once the renovation's done, we could try that too. Either way.
Yeah, I'm working on a couple of different projects right now where I'm hopefully going to be exiting in a refinance, potentially with you guys here. And I'm hoping that you do see some of the rate stabilization. I think you were talking the next 2 to 4 months. What do you guys see in that term as to why you think it could happen? It's just because obviously the war threw everything out there, and the Federal Reserve talking about increasing rates. So you've got those things breaking out. Are they the major drivers? What's going on?
That inflation numbers, job gains, different variables there. And it's often, in general with ebbs and flows, natural ebbs and flows of market and indexes, around that time is when we tend to see, historical corrections, but obviously no crystal ball. Just from a historical standpoint, that's when we tend to see things correct and stabilize when there's a lot of volatility.
Yeah. That makes a ton of sense here. I'm hoping it does drop that bit because I do plan on adding more rentals this year, and I'm looking at the market. We're looking at the way the market's increasing, but if rates increase, obviously it's going to stabilize pricing and actually potentially start to correct it. So
exactly, yep. Because I mean, with rates where they were at when they were low, the shortage of supply, demand was high. It was driving prices up, and it drives a lot of buying. But when to your point, when rates are higher, it prices folks out, which could help with the the supply number or whatnot. So